everybody. Welcome back to the show. I'm welcoming Shirish Jajodia from Microstrategy, and he's going to be talking with June Dam. I'll let him introduce himself, although some of you are probably already familiar with Microstrategy, of course. And June's going to ask him some questions, and y'all can learn a little bit more. Thanks very much.
Thanks so much, Shirish. Really glad to have you here. And yeah, so you're with MicroStrategy. You know, Michael Saylor's always in the news and talking. Really, you know, he's probably one of the key influencers in Bitcoin, and so it's I'm sure you know it's great to be able to chat with him. I'm kind of curious about how it is when you guys sell the idea of Bitcoin to other institutions. Usually the first thing I think institutions might think about is Bitcoin as digital gold. Maybe you want to kind of address that first.
Sure. So thank you, June, and thanks for having me here. It's a pleasure. I'll begin with the current macroeconomic environment, and then we can dive into Bitcoin as digital gold. So if you look at the current environment, we are currently in a very unique time period in our lifetimes. You know, the inflation in US and Europe is at almost 40, 50 years high. And over the last 2 years, there has been a significant increase in money supply around the world. So a number of international currencies are weakening against the dollar, including South American, African, and Asian currencies. And this is creating very challenging macroeconomic environment and is going to continue to create uncertainty and challenges for the business. But the silver lining in all this is that it's leading to an increasing awareness and understanding of the need for a digital asset like Bitcoin. You know, hundreds of millions of people are now becoming aware of the need for non-sovereign store of value and digital asset like Bitcoin. So at MicroStrategy, my role is I'm the Senior Director of Investor Relations and Treasury. I'm looking at the largest corporate Bitcoin treasury in the world and managing the capital markets activity. How do we manage all these Bitcoins? How do we buy more Bitcoins? And also managing our public company investors, existing investors and potential investors, and educating them about Bitcoin and why it is important, especially in this time. So over the last few months in the world of Bitcoin, there have been some interesting political developments worth highlighting. The executive order coming out of the Biden White House in March, which is the first time we have the executive branch in the US, in essence, highlighting and endorsing an asset class as being critical to the future of the nation. Another instance is Janet Yellen's speech in April at the American University, where she laid out the support for the innovations in the crypto economy. So all this suggests that the administration is going to enthusiastically move forward to provide responsible regulations to allow the crypto economy to grow. So if you put all this together, these macroeconomic developments together with the regulator signal, what we have is a world which is a bit insecure about currencies, property rights, and the 20th century banking and payment systems, but aware that they need to find a solution. So now turning to the question of Bitcoin as digital gold, gold has historically served as a hedge against inflation. So if you want to think of Bitcoin is engineered gold, it's engineered property, and it's engineered money. If we were trying to recreate a perfect gold, then instead of having like 6 billion ounces of gold, I would have like 21 million gold coins, illegal to mine any new gold. I would make it pure digital, weightless. I would make it programmable, so you can move it anywhere the speed of light for free. I would make it indestructible, and I would make it self-custodial. So I don't have to pay anybody to keep it for me. So if we stopped mining gold, you would imagine that gold would be more valuable. But currently, the gold miners are creating 2% more gold every year. So if you do the math and calculation, the half-life of gold is 35 years. That means over 100 years, you would lose 88% of value held in gold. So if I thought of gold as the ultimate non-sovereign risk of portable store of value asset, then the idea of crypto gold that has a half-life of forever that I can program seems like a better idea than physical gold. So Bitcoin is better gold than gold with equivalent of 21 million coins. No more can be created. 21 million coin network, which is decentralized, that is running on tens and thousands of nodes around the world. So there is no company or government, so no central point of failure. And it has a history of 13 years of operation, and it's the dominant digital network. So if you think from a millennials perspective who have a longer time frame ahead of them, I would say there are a million ways to invest your money, but just one reliable way to save your money, which is Bitcoin. And another thing that I get most often, like people questioning the utility of Bitcoin, there's an enormous amount of innovation being built on top of Bitcoin and Lightning Network, which has the ability to impact the entire financial and payments network as we know it.
Thanks for that. Yeah, that's great. So what are the biggest objections you get from institutions? Because I assume that you talk to institutions, many of them about Bitcoin, whether they invest in your company, Microstrategy, or if their treasury adopts it themselves and tries to find a way to buy Bitcoin through other means. So what are the biggest challenges or objections you get from institutions today? And how's that changing over time?
Yeah. So currently, the main objection that comes from the institutions, or the challenge, I would say, is the accounting framework for digital assets on the balance sheet from a treasury perspective is unfavorable. And what it means is that it defaults to a treatment as indefinite life intangibles. And without getting into too much details, what it means is if a company is holding Bitcoin on their balance sheet, they bought it at 50,000, it drops to 30,000. Then they have, even if it drops for a second, the companies are required to book an impairment loss, which is non-cash, on their balance sheet. So it comes out as or on their P&L, it comes as a impairment loss, but we cannot book gains on Bitcoin price appreciation until we sell the Bitcoins. So for a company like us, we do not plan to sell our Bitcoin. So we only have, it's one directional, that there is an impairment loss. We keep on building this book losses, but we cannot mark up the value until the Bitcoin is liquidated. So a huge one of the catalysts here would be a favorable accounting treatment as something like financial instruments with more like fair value accounting. So that will be a huge catalyst. And one of the recent positive development is FASB, which is Financial Accounting Standard Board. They have agreed to add a project to review the accounting for exchange traded digital assets and commodities by a unanimous vote of 7-0. So if that becomes more favorable, we will see more and more institutions looking to adopt Bitcoin as a part of their treasury. And another challenge I would say is for the institutions. Currently, a lot of institutions just can't actually invest straight in Bitcoin. Like their charters or their policies, they don't allow them to invest straight into Bitcoin. So approval of a spot ETF would be a huge catalyst. There are few under review by SEC. So if a spot ETF gets approved, there's a lot of institutional money sitting on the sidelines, which is looking to enter into Bitcoin. I mean, that will get directed towards Bitcoin. So that will be a huge catalyst. Other than that, I would say it's just education. So a lot of institutions, they are getting educated about Bitcoin. Earlier, they neglected the asset class or did not pay enough attention, but now they clearly know that they cannot ignore it. And they are warming up to the idea, and they're learning more and more and preparing themselves to embrace like how they can get some exposure to this uncorrelated, it should be, or like a non-correlated asset class, and what can they do about it. One of the challenges there is like whenever an institution decide to enter, it takes few months for them to get exposure. It's not like very straightforward. They decide one day, and a retailer, like a retail investor who can just go to any of the exchange and buy Bitcoin. It's not like that for institution. it takes them a few months of preparation. So that is undergoing at the back, in the background, and we will see a lot more adoption coming.
That's fantastic to hear about. And yeah, accounting, I never knew that was such a big issue. The spot ETF I've heard about, which is, I guess those are the two important, I guess, milestones that need to happen before we get even more institutional adoption. Are there any particular types of organizations that are more recently adopting Bitcoin? If we're talking pension funds, companies, nation states, maybe you want to touch on that as well. So
sure. So there's a great website that I follow. It's called Bitcoin Treasuries, which lays out what public companies, what private companies, what governments, how much Bitcoin they hold. And you would find it surprising that how much some of those hold. So as per the Bitcoin Treasuries website, currently there are over 30 publicly listed companies that own Bitcoin on their balance sheet globally. Microstrategy is the largest corporate holder of Bitcoin in the world, holding over 129,000 Bitcoins. And Tesla is the number 2 on public company side. And the type of companies that have adopted are, tech founder-led companies where it's easier to make a decision around making such a huge, institutional move. Then family offices, there's an adoption happening on the private side. Then a lot of Bitcoin miners. Majority of those 30 public companies, a lot of them are Bitcoin miners who are holding Bitcoin on their balance sheets. So these are the typical kind of companies that we see now. But one of the statistics is that the US corporates hold over $4 trillion of cash on their balance sheet, which needs to be addressed in this inflationary environment. So they need to find a way to put that money to use to generate more returns than the inflation to get a positive real yield, and which is challenging. So a lot of in the public company earnings calls, a lot of there are mentions happening about Bitcoin. Analysts are asking questions about Bitcoin. So that is changing. We also see an increasing number of dedicated research desks coming up at bulge bracket Wall Street banks that are focusing on Bitcoin and crypto research. And there are a large number of pension funds and sovereign wealth funds. As I said, they're educating themselves. So the education process is ongoing in the background. And so from an institutional perspective, Bitcoin is clearly distinct than the rest of the crypto, given its status as property, while the broader crypto tokens loosely fall into securities. So all these institutions you're seeing, if they adopt, Bitcoin will be the first thing where they put their attention to.
Yeah, that's fantastic. Thanks so much for all the insights, Shirish. Feel free to put your contact information in the chat window, and people can ask questions. Feel free to do some one-on-one networking if you have time. I really appreciate it. Any final words that you'd like to share with the audience?
Yeah, actually, one more point you didn't mention about the nation-state adoption.
Oh, okay.
So I will address that point.
Sure.
I mean, there are billions of unbanked people in the world who currently do not have access to banking services, but they do have access to smartphones. So Bitcoin has the potential to provide superior property rights to the people around the world. And so, for example, for somebody in South America or Africa, they don't have access to the equivalent property rights to somebody in the US. Like, they do not have access to the equity markets or the real estate investments in the US. But for the first time, they have access to Bitcoin on their smartphones, which can provide them equivalent property rights to somebody in the US or developed nations. So nations needing it the most will adopt it the first. And we saw El Salvador becoming the first country to adopt Bitcoin as a legal tender. Second one was Central African Republic in Africa, a small country. But I think 2 weeks ago, El Salvador held a conference in their country, inviting 44 countries from around the world to educate them on Bitcoin. So it was a multi-day conference, I think, huge participation. And we will see the adoption more and more coming by the countries that need it the most. And there's real value here to benefit the humanity. So we will see more and more adoption coming in the time to come.
Thanks so much, Shirish. This is exciting to see, and it's and we do have in Indira Kempis up next, we have a pre-recorded video that she prepared for us. So we'll hear her thoughts about Bitcoin, the great equalizer, and Mexico. That I think you should stick around for that, and as well as the audience. So what I'm going to do is I'm going to just share my screen maybe, but thanks so much, Shirish, and feel free to kind of stick around for the networking, and thanks so much. We'll see you around.
Absolutely. This is fantastic. One final thing I would say is for people who want to learn more about Bitcoin, we have put together a resource called hope.com. Bitcoin is hope. It's very easy to remember, hope.com. People can go there and look at all the different resources, podcasts, books, and also, if any company is looking to adopt Bitcoin as a part of their treasury, we have our corporate playbook available there, which is open source for people. So look at hope.com, and you need to put in 100 hours of work to learn more. And exciting times ahead. So thank you, June, for having me.